Well, hello, Maverick traders. Welcome out to your currency recap for September 25th. Corey here with you. Nice to see all of you. So when we look at the markets, we're going to look at what meaningful news was out there today. We're going to look at what areas of interest, was crypto moving? Is it the currency markets within currencies? Is it CAD? Is it Kiwi? We've been highlighting CAD for upside trades the last few weeks, and the Canadian dollar just continues to perform. Oil prices continue to zoom. It's just an area of focus for us. So we'll look at those. We'll look at other setups and other meaningful moves in the broader markets. All right, so as we look at the markets, really quiet in crypto land. We're going to give those a 0 for velocity score. The Australian dollar, I'm also going to put at 0. It is underperforming the other currencies, the other commodity currencies. Kiwi acting much better. Canadian dollar's been on a tear. So some might look at that and say, well, should we buy the Aussie because of that? Because it's a laggard and it'll play catch up. And I don't look at it that way. Generally, when something should be going higher and it's underperforming, that is a bad sign. So Aussie, it could start to go, but until that time, it's just a laggard and not a great sign there. I would very much keep that in the 0 camp. US dollar still strong. Japanese yen still on the weaker side. And the European currencies, euro, Swiss franc, British pound, sterling, those are the underperforming area and have been that way for a couple of weeks. So let's not try to predict when that will change. Let's continue to look at relative strength, relative weakness. And that means buying things like CAD and Kiwi and US dollar and shorting things like pound, Swiss franc, euro against them. Now, news of today. We continue to look at those euro currencies to the downside. AI continues to evolve. It's going to continue to have more use cases. You're seeing corporations touting their AI advances and so forth. And equities are now in a downtrend. That really was confirmed last week on the Fed meeting. We said, I was very much out on record saying I felt confident that it would eventually break to the downside out of that consolidation. And I wasn't 100% certain. There's never that certainty, but I certainly was leaning that way, and there were a lot of signs that were pushing that way. For example, even though the S&P and these major markets were in sideways trends, you had 70% of stocks below their 50-day moving average. You had the market breadth, the majority of stocks more in downward trends, and it certainly led us to believe that the markets were going to eventually break down. They did last week, so we are in risk-off mode in equities. Currencies today, not a whole lot going on. 0.5% down in euro and Swiss franc, 0.5% up in CAD and Kiwi. That relative strength, relative weakness continues to play out. Crypto up about 1%. Gold not had a great week, and I highlighted that I thought gold would do better. Admittedly, it did, and now it's not. And so I don't know. Gold continues to kind of stay down there. If it starts to advance again, I'll jump back on board. But for now, I have to trust the market price action and say, well, it's just not acting right. It's not acting as well as it should be, in my view. If we look at crypto, it's Bitcoin Cash and Litecoin, a little bit more speculative in the crypto space, that are outperforming. Bitcoin and Ethereum, a little bit lagging of late. Now, as we look at equities, I have more of a bearish outlook, as we've talked about. We're firmly below the 20 and 50, and the trend is now firmly to the downside. We had highlighted this symmetrical triangle, a series of lower highs and a series of lower lows. On the Fed meeting last week, it broke to the downside, and away we've gone from there. we are making lower lows. What comes next? Well, even as you bounce, you're likely to set lower highs and then continue to go lower. So the zig and zag pattern for equities is lower highs, lower lows. I would expect that to continue for the foreseeable future. Again, that's a risk-off mode. If we look at this week, you've got to be prepared for GDP on Thursday morning. Not a major market mover, let me be clear. I don't know that the markets care so much whether it comes in at 2.2, 2.1, 2.3. Probably not that big a deal. But here are two that will be a bigger deal to the market. Fed Chair Powell is speaking on Thursday, and then core PCE, which is an inflation gauge. It's actually the Fed's preferred inflation gauge, comes out on Friday morning before markets open. And that one is probably the most significant, along with the Fed Chair Powell speaking. Those are the big market movers. Those could move US dollar and other currencies right along with them. So be prepared for that. Possible trades, don't overthink it. What's working are things like CAD and Kiwi. So here was the breakout a few weeks ago. We consolidated recently and we continue to advance. Now you might feel like, well, but it's too overdone. No, these can go for some time. They do not have to have the zig and zag type of patterns. And part of the reason for that is that when you think about these currencies, it's against a variety of other currencies. So CAD is relatively strong. All it takes is for it to continue to be relatively stronger than the majority, and it will continue to go up. And that's where we're at, in essence, in this mode. So CAD on the long side. And if I were looking at any of the others, I would go Kiwi, not Aussie, which has lagged. Kiwi would be next on my list. But let me be clear. If I were going to buy something right away, it would be CAD. Kiwi, I wouldn't chase the momentum. Why? Because Kiwi has a lot of overhead supply. It has a lot of potential sellers. So Kiwi is far more likely to zig and zag. Are you going to get a pullback in Kiwi? I think so. You'll probably see a couple of days weakness in the Kiwi coming up. And when that happens, I would look to be a buyer on that weakness. You can see the characteristics of this are a bearish to bullish reversal, much better looking chart than the Australian dollar, so continue to look there if you're considering one of those commodity currencies for possible buys. In conclusion, continue to look for that relative strength and weakness. Use proper position sizing. Remember that we've got Fed Chair Powell speaking on Thursday and core PCE on Friday, headlining this week's events. We'll continue to get those currency recaps out there. Have a great rest of your week, and we'll see you next time. Goodbye, everyone.